All right, welcome back, everybody. We're going to recap the video from last week on Amazon, and this may be my most unpopular video ever, but that means that I am lead trader with StocksToTrade Tim Bohen. Let's talk about Amazon. We will link last week's video below. Definitely check that out for some context, or maybe you already watched it. Hopefully you already watched it. Hopefully you're watching every one of these videos and you're sharing with your friends. I mean, listen, everyone out there, okay, S&P 500 breaking 390 this morning. Everyone. Every idiot on TV, every mainstream media clown, Jim Cramer saying the world is ending. Meanwhile, we got stocks like AERC exploding, COGT, RDBX. I mean, this week has been the wildest week in penny stock low float momentum in like 3 months. Meanwhile, all these idiots are talking about the world ending. Speaking of idiots, they all told you a week ago to buy Amazon in advance of the split. And I am telling you, the reason this is my most unpopular video, it'll probably get like 3 likes and 10 views, is, I joke about spiking the football. I always try and not do that. And then somebody actually sent me a shirt, and the quote is, "I'm not here to spike the football, but I'm going to spike the football," and it's got my name under it. Anyway, the point I'm making is, I want to review it because everyone that bought in advance of the split right here all last week. Now, this is the post-split price. Remember, Amazon was trading roughly $2,500, 20 for one split. So basically, it closed last week on Friday at 125-ish. Okay, here we are at 109, and I don't want to hear it. Okay, don't give me this, oh, it's because of the overall market. It's not. Okay, yes, the S&P isn't helping Amazon. Obviously, Google's down, Apple's down, real stocks are down this week. This is 10% the overall market, and it's 90% people not being educated and following the herd, following clueless talking heads that aren't out here every single day trying to help you, okay? They don't care about you. Nobody on CNBC cares about you. Nobody at Business Insider cares about you. Nobody at Fox Business, none of them care. What they care about is selling ads for toothpaste and prescription drugs and booze and cigarettes and everything else that's bad for you. You're probably better off with the prescription drugs, booze, and cigarettes than you are watching their crap. That being said, I'm here every morning, StocksToTrade Advisory. Click the link, giving you the read of the day. Today, AERC, we talked about a break of 10. It went to 14. RDBX, we talked about a break of 11. It went to like 14 plus, too. I mean, I'm doing that for you guys. Not trying to bag in these crowded, herd, terrible ideas. Understand the mechanics of the split. What does the split do? All it does is increase the size of the float and lower the price of the stock. Nothing fundamentally changed in Amazon. They didn't release a new product. They didn't make Prime better. They didn't, create some new streaming service or make AWS better or any of these things that they crush. Nothing changed last week except for fools were led into a crowded trade, and I tried to save you. And if you listen to that video, you didn't get bagged and you're not down $15 a share. All right, now what? You gonna yell at us for 20 minutes, Tim? Or are you gonna tell us what to do now? Number one, cut your bag, okay? Which, of course, if you didn't do that in 5 days, there's no hope for you. I mean, no offense. If you didn't sell Amazon Monday, Tuesday, Wednesday, Thursday, Friday, 5 red days, okay, sell your bag. Now, if you did listen, how are we going to approach? I'm actually excited for next week in Amazon, now that the anger is out. The nice thing is we got this nice little base here to trade off of. So if you look right here, a lot of basing right in that 108, 109 area, which is right where we closed this morning. So I expect trend to reverse next week. Now I want you, what I love about this setup is you've got very clear area of risk. And that's what's great about waiting for the chart to develop. So now what we're going to be looking at, and this goes next week, actually next few weeks, okay? If the bottom isn't in, let this thing fade away. But what I like about this is we can now risk 52-week lows, okay? So you basically 104, I'm going to round to 104 as 52-week lows. And the reason I get so excited about that as an area of risk is, to me, it's a very clear area to focus your stop on. Now, I say that because one of the biggest biggest things newer traders struggle with, when to stop out, when to stop out, when to stop out. Okay, you can justify. This is something I talk about all the time. Listen, people can talk themselves into anything. Humans have the ability to convince themselves of anything. Mass murderers talk themselves into thinking that they're good guys. Hey, I'm helping people out. Meanwhile, I'm axing some guy in the head. All right. So people can convince themselves of anything. But if you have discipline and the ability to base off of the chart, you look at that area like I do, and you're like, listen, if I buy 109, 110, and I look for that gap to fill, which I think Amazon will fill that gap up into that 140 area. You can see, so that's also a key level. So basically 140 and 104 on what I'm looking at. So, but listen, if it doesn't work, if the idea does not work, and you take that red to green entry next week, 110, 111 after it bases, and then you do not stop as I go up. That red line I just drew went over onto my, speaking of axe murder, did you notice that's a carpet from The Shining? Reference. Anyway, if you don't stop out at 104, you're an idiot. Sorry, okay? I know I'm extra aggro. I've had probably too much coffee, but what's great about risk in 52-week lows is who holds a stock when it breaks support that is also 52-week lows. Bag holders, fools, clowns, people that can never, ever make money in the stock market. That's who holds. So I love that as an area of risk. We're going to key off of 104 for our risk. We're going to look at 110 week open red to greens into next week for an entry. And then ideally we fill that gap up to 140. Okay. Stick to the plan. If 110 comes, it collapses through 140, you stop out, you move on, you lose $6 a share. But I think again, I like the odds of this filling that gap. It'll take a while, okay? Understand this is not a day trade, okay? So if you're looking to day trade Amazon, not really the best stock. I mean, huge market cap. I mean, this is, depending on the day, this, Apple, they're, the number one, number two biggest market cap stocks. Understand when I say fill the gap to 140, I'm not saying in 2 days. This is a swing, okay? Probably going to take a couple months, but I think it's a high risk to reward and a good setup. And the great thing is now you can profit from the fools, okay? The TV watchers. Don't watch TV. Throw that thing out the window. Read books or watch my YouTube. So anyway, have a great day, my friends. We shook them out. I think this week scared out the clowns, and love Amazon for a swing trade going forward. Have a great week. Hope to see you on StocksToTrade Advisory. Hit that link below. I'm live every day, 8:30 Eastern, going over all the volatile stocks of the day, like the AERCs, the RDBXs, the COGTs, which were the best stocks this week. Have a great day, my friends.